Happy Sunday, everybody. I am doing my trade recap from Thursday. I am a little bit behind, but on this video, I'm going to show you how to use the Fibonacci retracements to find your entries and your exits when trading QQQ. So I guess the first thing I need to do is go to the retracement, and I'll show you my properties. So the only thing that I have is the 382, the 618, the 236, the 786, and the 1272 levels. If you want the 0 and the 1, those are okay, but you don't necessarily need them. But I'll just add them for the sake of this video. So those are all the levels that I use to find my entries and my exits. So before the market opened on Thursday or any day, you want to draw your pre-market levels. Normally, I would just plot the high and the low. So I'm going to do the same thing with the Fibonacci retracement. I'm going to go to the pre-market high, which is about right here. And I'm going to pull it down to the pre-market low. And the pre-market low was about up here. So when the market opens, we're going to wait until we get that first low or till we get that first candle to pull it into the market. So we will pull it right here. And then if you're one of the patient ones to wait the 5 or 15 minutes, then you would have that next low right here. And then you will have your levels for the entire day to trade the Qs. So market opened and the market took off to the upside. Am I looking at the right date? No, this was Friday. I need to look at the 28th. Oh, I need to be doing my recap for the 28th. Shit. That means I got 2 recaps to do, y'all. I don't even think I alerted on Friday. So here we go. And I'm not going to redo this video. So, oh well. So here is Thursday. So our pre-market levels are right here. This is the low, well, the high. Well, no, this is the high right here. And then this is the low. So not much to work with that day. Anyway, so pre-market high, pre-market low levels are marked. We have the levels for the day. So this is the day on the 28th that I alerted the puts. So the puts were 83 cents. The $300 put was 83 cents. I bought 2 here. And then when we got down to the bottom of the retracement, because you're going to enter at resistance on your fib levels and you're going to exit at your support on your fib levels, or at least scale out. So I sold one for 169, and then I sold one for 159. They ran down here below this level to 194, because at that point I don't think I had adjusted my my low yet. So anyway, I exited here. So, and if you want to play both sides, when you're using your retracements or your fib levels, you already have your levels marked. So now here QQQ has found support. So now you can say, okay, let me look and see if we're going to reverse, and I can enter into a call. And so I guess if you had the MACD or something like that, that would have kind of guided you. However, let's see, what level was we on? So if you could have waited until you got to the 382 right here, if you wanted to, for great confirmation to get into the trade, or if you had confidence to see this candle here as a bullish candle, you could have gotten in, and you know your stop loss would have been below this candle here. So that was Thursday, and I think that was about 92% on my exit. But if I had diamond hands, it would have been, let's see how much. It was 136% if I had held both to $1.94. So now let's carry on. I'm going to delete this so we can get ready to end this video. Okay, so back to this day here on Friday. I did not make this alert Friday because Friday it was a little bit choppy and didn't know what to expect. But anyway, market open. We got our pre-levels marked already from the pre-market high to the pre-market low. And once the market open, we're going to wait patiently for a few minutes, 2 or 3 candles. I normally wait 2 or 3 candles before I enter the market. So this would have been the low. So if I wanted to take calls here, we found support to take calls. And this would have been my target price here for exit. And once again, it pulled back because it made it to resistance. It could not get above this pre-market level. That's why the pre-market levels and the pre-market pivot points are very useful when it comes to trading. So at this point here, on the pullback to the 382 level, you could have gotten in the 314 calls. They were 41 cents, and they ended the day at 353 for 429% return. So this video is not to show you the alerts. This video is to show you how you can use the pre-market levels to use the fibs for entries and exits. Hope this helps. See you later. Bye.